Oh, we're not done yet. No, we're not done yet. We're just getting warmed up. Got one more day left this week. Want to make sure we make the most of Friday's trading session. It's already Thursday afternoon. We're getting ready for Friday's trading session. Get a bunch of great trades setting up on our radar for tomorrow. You know me. I'm going to make sure we know all the best trades. That way you can make some money on Friday. As always, before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel so you don't miss tomorrow night's video. And if you guys enjoy the video tonight, you know what to do, right? Hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Friday. Let's finish up the week with a bang. It's been a fantastic week so far. We got one more day left. Boy, everything's pretty bullish right now, right? You can see bulls here, have the Nasdaq, bulls here, have the S&P, bulls definitely have the oil here right now. Again, markets are definitely bullish. There's no question about that. But I'll tell you though, we've got some ranges down here. We've got major areas of resistance up overhead. Do you smell that? It smells a little bit like some traps waiting for us here on Friday. I love the smell of a trap early in the morning, right? It smells like money as always. But so we're definitely bullish, but again, I'll tell you, there's a lot of traps up there overhead. I would love to look for some possible shorts up around these highs here, and then possibly really a full rotation all the way back down to those lows here, where possibly another double bottom bounce here for tomorrow. So, boy, we have a ton to talk about on this video tonight. Now, tomorrow's a Friday. Before we jump in and get this kind of party going into each of the trades here for tomorrow, let's make sure we're all on the same page here. There is some big news coming on Friday morning. Retail sales is pretty much the big headline number for tomorrow. We've got Raphael Bostic, right, from the Fed at 8:45 Eastern Time, and we get industrial production at 9:15. The big news for tomorrow is that retail sales number at 8:30 Eastern Time. We also, of course, right about 7:45, 8 o'clock Eastern Time, we'll hear from earnings reports tomorrow. We'll hear from Wells Fargo. We'll hear from Bank of America. And, of course, the bulk of earnings will start next week. So quite a bit of potential action in the pre-market as earnings start to hit the tape tomorrow morning, and retail sales will definitely be the big headline number for tomorrow. That will be the potential market catalyst as well. Also, don't forget too, we are watching crude oil rollover for tomorrow. We're probably going to get rollover either tomorrow or next Monday. We'll talk more about that as we go deeper into this video here tonight. And speaking of tonight's video, please don't forget, as I mentioned in last night's video lesson, there'll be no YouTube uploads next week. There'll be no newsletters next week, that third week of July. I'm working on some great new video content for you guys here at School of Trade. If you're a member of mine, got a brand new video course update coming to you guys later on this summer. Retail sales is the big number for tomorrow. Earnings before the open. Watch that rollover on the crude oil. Back to our charts here, though. All the good stuff is on the charts, isn't it? Nasdaq's ready, S&P's ready, crude's ready. Now, whether you trade one of these markets or you trade all of them like we do in our trade room, make sure you watch all the way to the end of this video, because I'll provide different trade variations, different trade ideas, different advanced tactics as I go deeper into this video here lesson tonight. So I'll give you a reason to stick around all the way to the end if you're a serious trader. Grab some notes, take some screenshots, and if you got any questions, drop the questions in the comment section below. How about some Nasdaq? Why don't we grab a look at the Nasdaq and get us going here to start off here tonight. Two kind of key core insights on the Nasdaq that tell us where the best trades are likely setting up for tomorrow. The first thing is the fact that today was an inside day. An inside day is a very, very big clue. What is an inside day? An inside day basically means we spent the entire day today inside the range from yesterday. We had that big wick top from the CPI report, that big move down, and you can see we never took the lows out, we never took the highs out, and so really you almost kind of look at this and go, okay, these edges right here, these edges right there are kind of where the best trades usually will be, right? As the market kind of rotates back and forth here, it's kind of like one big trading range at this point. Ranges are magnets. We expect that kind of middle of that area to be the big magnet as we go up, looking to sell it back down. As we go down, we may definitely have some shorts on the way lower. That's definitely something we'll be keeping an eye out for here tomorrow, and then just like today, possibly another big double bottom reversal off of that low. Again, using kind of the middle of this chart as kind of the magnet. So, inside day they're called, right, in the business, and they pretty much tell us to buy low, sell high, and fade the breakouts. On top of that, we also have two ranges on this chart, which really just kind of goes right along with the inside day mentality. I've got a range right here. I have a range right here. Usually when you have two ranges like this on the chart, the market will try to fill in this area in between. And so what oftentimes happens is the market will try to push up, come back down, take out those lows, back up, right? And it will soon start to fill in this area. Again, when you see the fact that it's an inside day, it makes a lot of sense, right? It makes a lot of sense here, kind of how that game plan is going to work out. So knowing these kind of two key insights on this chart right now, what's the best way to trade it right now? Well, we definitely know, looking at this, that sellers have really quite a few options here. The bears would love to sell into some moves going higher. I also think there's some really nice trades for short side as we rotate back down, as I mentioned before. And then again, I would say buyers down here will then be able to pick things up and start to look for those long side trades. We got that reversal that we talked about in last night's video. So there's plenty of ways that we can make money on this stuff here for tomorrow. Really kind of the big component right now is for example, as we go higher, we're very bullish right now. You can easily see we're bullish into that one leg, two-legged measured move. The sequence that I'll be looking for tomorrow, and I would encourage you to also keep an eye out for this as well. I think some of the best trades we're likely going to get on this tomorrow would be a break higher, and then use that classic two-try failure into that new channel, which we talked about quite a bit in last night's video. So as we go higher, we're running into areas of resistance up overhead. Once we get into those areas of resistance, we know we're bullish, but again, with that inside day component here now, not a real safe spot to be a buyer up here. I would love to see the buyers come in, try once. Now they got to try twice, because again, we are so bullish at this point. Once they try twice now, we are in major areas of resistance with a big juicy range magnet right below us here. Once those buyers try once and try twice, think about where all their stops are. The easiest money you're ever going to make in a range environment that we're seeing right now is when you're selling the high of a range and you've got buyers who are caught long, and all those stops, right, they get triggered and they're basically short sellers, right? You can't get out of a long trade without selling your way out of it. So if I can get these buyers trying a couple times up here, think about where those stops are, think about where their pain is. I can now look for, at that point now, that nice juicy signal candle coming off that high, and then go look for that dump going back down into that trading range. Now remember, at this point of the game, your job is kind of just getting started at this point now. Now we can mark up a new trend line off that low. We can find a channel off that high, and as we saw, that beautiful trap right late in the day today, that trap is oftentimes where the money is. So a two-try failure off the high, and then as we run lower, we'll get below that 21 moving average, get that trap above a prior swing. Buyers will oftentimes come in and try to buy that pullback off the moving average. Once they do, now you can light those stops up with a failure, and then of course grab that pullback as we go lower, right? Basically, the same setups that we talk about in the free trading course are the ones I'm going to look for right here. Make sure we get that two-try rule up here, because again, it is very bullish at that point. 1, 2, grab that failure, and then as it rolls over, don't chase it going lower. Hit that trap, hit that failure, hit that pullback combination. Again, all the same setups that I teach in the free trading course on the website. Which reminds me, I know that most of you guys and gals have taken the free class. You've learned all the setups. You know where to use them and where to skip them. I'm always amazed how well you guys do off just the free lessons on our website. But listen, if you haven't taken the free class yet and learned all the entry tactics, what I'll do is I'll put a little link up here for you in the upper right-hand corner. Grab that link. Take the free course, learn the trading strategy, the same stuff we use every day in our trade room. If you hate missing the best trades each day, if you're taking too many losses, that game plan I teach in that free trading class will get you on the right track and give you the tools you need to start making consistent money in these markets each day. So watch that pop up and that reversal back down. Where do we think the market wants to go at that point? Well, like I said, right, kind of this middle area, right? So we go up, back. We'll know more tomorrow once we see that. But, think about this area right back in the middle of that range is where this puppy wants to go here. Now, as we go higher, right, there's not a lot of space up here. So as we go higher, if we want to buy up here, we really have to see some strength, really see some strength here. We're going to take out those highs. We have to hold that pullback, and we have to really blast. I mean, this thing really has to punch going higher. And if we can get quite a bit of strength, I'm not saying it's impossible. It doesn't seem very likely here for tomorrow. But again, if we can get that pop up, hold that pullback, and get that blast going higher here, now I can use all of that momentum to find a new trend line off that high, find a new channel off of that low. I can drill down to my faster time frame. This is a 4,000 tick chart, by the way, on the NASDAQ. We'll drill down to our entry time frames, which you'll learn more about that in that free video class that I mentioned earlier. But this is exactly where, again, we can find some traps, we can find some failures, we can find some pullback combos, right, coming off of that low. This, again, I'm going to warn you right now, this needs to be a very strong, there needs to be some fresh news, there needs to be something new that's going on, right? The earnings reports tomorrow will have to be stellar. There'll have to be something really that kind of changes the overall sentiment of this market right now. This is not my favorite trade for tomorrow, but I'm more than open. I'm open to anything, right? I don't care what direction I trade. But right now, with the inside day, it is more likely right now that we pop up and end up fading as we go back down into that trading range. Now, a very important question to ask yourself at this point is what if we go lower? Can I buy the pullback up here? Maybe. Can I sell it as we go down? I definitely think there's some great shorts for that rotation back down again. Let's cover this on the S&P though. The NASDAQ and the S&P are really quite similar in that sense here. So I'll try to repeat myself too much here on the S&P. Let's talk about the short side. And again, everything we kind of talk about here right now on the S&P short side can also be applied to the NASDAQ short side. Okay, so just be aware of that. This is all pretty much interchangeable. There are two key insights on the S&P. Now, kind of piggybacking on the first insight off the NASDAQ, the S&P is not an inside day. The S&P is what you would call a bearish outside day. And if you understand what an inside day is, you probably can put two and two together here and figure out what an outside day is, right? It's a bearish outside day. In other words, we took out that low, right? Took out that low, never took out that high, right? So there's a little bit more of a tilt, if you will, to the S&P here right now, which is another reason why I think that short off the high will be kind of the money maker unless something really dramatic happens here and we really punch and go higher here. So bearish outside day, and really in all reality, this really isn't that big of a deal. It's kind of your typical bearish, trend overall here right now. But since we talked about an inside day in the NASDAQ, I figured that would be a good clue, or at least something to kind of compare it to here on the S&P. So that slight little bearish tilt here more than, of course, the NASDAQ right now. And the same thing here, right? The two trading ranges, right? Two trading ranges. Got a range right here and a range right here. Whenever we have two ranges, we know kind of the middle of that area will likely get kind of flushed out, right? So they go higher, they go back in, we end up back down, right? So we oftentimes get something like that where it starts to kind of fill in that area, right? And that area gets a lot of overlapping candlesticks. And because of that, we can sell high, we can buy low, and again, I think we can sell it as we go lower here as well. Now, we already talked about as we go higher here, that 1, 2, find that channel. So I'm not not going to go over that again. That's the same basic idea here on the S&P, right? So 2-try failure and then grabbing one of those shorts off the high of that channel. I would say, though, if you think about the S&P compared to the NASDAQ, the S&P definitely, in my eyes, has a little bit more open space overhead. Remember how I said earlier on the NASDAQ that we've really kind of got to get up. We have to hold that pullback and blast on the NASDAQ. Well, you can see the S&P has a lot more open space up here. So if there's one market that has more potential for that breakout and that run higher, I would definitely say the S&P is probably the candidate for it. But it's kind of funny, it's kind of ironic how the S&P also was more of a bearish tone to it today. So, you know, it's kind of funny how that's kind of bounce to the route. Now, bottom line is, if we do see that pop and that blast off that 21 moving average, I can now mark off that high. I can mark off that low. I can drill down and find those traps, right, and find that entry off of that low. That first test off the low of that channel, or for example, maybe a pop and grind, right? We pop up, we start to grind higher. Again, all of this can be applied on the NASDAQ as well. Again, something will happen, right? Something will happen. Something will spook this market. You know, the news will be really good, or something new comes into the market that we don't see for tomorrow, and everything starts to rip higher. If that's the case here, draw that trend line off that high, bring it down to that major low. One of my favorite trade setups is that pop and grind, get that pullback below that prior swing. And again, look for those traps, look for those failures, and blast up from there. I got a pretty good idea where the S&P wants to go at that point. We get that 38.73 level overhead here, and that'll be right up around that wick top, right? So if the buyers can get this thing to hold, we definitely know where that level would be. And then what do you think? Is it possible that we may see that breakout higher, and then late in the morning, like we saw today, that 1, that 2, and that drop it back down? Absolutely. That is definitely something that wise traders will keep on their radar for tomorrow. So buying that breakout as we go higher, and then as we take out those highs, again, you're at major resistance. Big long-term bear trend right now, 1, 2 for the buyers. So right into those stops, and then again hit them as it rolls over as well. So just a little bit more information there, again, that you can also apply to the NASDAQ as well. Remember though, the NASDAQ has a lot more big levels here overhead, so it doesn't seem as likely the NASDAQ. But again, if we get that strong breakout, I have no problem buying that breakout pullback if we can get it. Now, the good stuff. Let's talk about the move lower here. Right? How do we short this thing as it goes lower? You know, both the NASDAQ and the S&P here have that range down below us, and really, for the most part, that range becomes a big problem for buyers to want to come in and buy this pullback. We have a strong move up. They've already retested that high. So there's no unfinished business, right? There's no mission to accomplish. We talked about that a lot in the last 2 nights of nightly newsletter. So as we pull back here right now, how would I buy this? Well, what's the concern? The concern is these multiple trading ranges, right? The concern is this range down here looking to drag this market going lower. So the only way you can really buy this thing safely is to buy it with a 1, 2-try failure. We have to kind of trap in those bears who are trying to sell this thing back into that range below and use those stop losses as fuel. Now, this could easily slingshot here into a pretty good long trade, to be honest with you. Bears once, bears twice, all the stops now get hit, right? All those stops get lit up like a Christmas tree, and all of a sudden now they get that pop, right, and that run. Now, once we get that pop and run, now we can draw that trend line off that high, find that channel low, and grab it from there. So again, it's a 2-try failure because, again, we're worried about those 2 ranges, right, in this overall bearishness right now. So 2-try is the perfect fit for that. Run those stops, and then obviously I'm simplifying this right now. Trap setup, failure setup, pullback setup, coming off the low of that channel. And again, we pretty much know where the market wants to go at this point, right? It wants to take out some of these other levels up top here, and then from there, you got it. 1, 2, back down into that trading range from there. I'll tell you, this could be a really good sequence tomorrow, right? That trap in the bears, pop it up, short off the high, We see a lot of that stuff back and forth every day in our trade room. I would also keep in mind too, is as this market now pulls back, keep your eyes on. Here are 3 different kind of breakaway patterns that we might see here. One of them is probably the one that's the easiest. Let's say, for example, that we what's probably likely right now would maybe a head fake out that high and a blast going back down, something like that. That seems pretty likely here at this point. So whether it goes up and then back down, or whether or not it opens up and kind of blasts going lower here, watch out for a strong move lower, a shallow pullback, and a lower low in price. What do I always say? Traps, baby. These are one of the easiest and easily one of my favorite types of kind of breakaway patterns or reversal patterns, if you will. The most important thing is that initial leg lower should be really, really strong, right? It's a real strong pop going lower. That shallow pullback will oftentimes barely touch that moving average, again, the 21 EMA, and that lower low. The lower low is important because the lower low confirms it's not going to be a 1-2 back up. Does that make sense? Right? That lower low tells me, okay, I'm not looking for the failure at that point to buy it back up. At that point, though, all those bears will come in and look for that short off of that trap. And as always, as I talk about in the trade room every morning, if we can find a channel kind of off those lows, it's great. Not required, but I'm always looking for those channels drawn backwards off of the lows and then up around those highs, because they make those entries almost bulletproof. Targets on the way down, even though we think the market wants to go back and take out that low, it will be prudent to take some profit off around some of these prior swings. Because again, don't be surprised if we kind of get this thing to go up and then take out that low and then back up again. So you will want to, at least I'll be looking for kind of taking profit relatively quickly as it goes lower. And then again, as we get down here, right, same thing we saw here where we start getting those bears coming in with once, with twice, get that pop right up, and then grab that channel and grab that first test off that channel. So as we go back to those lows here now, we retest those lows. Look at what happened today. That same kind of double bottom reversal we talked about in last night's video. Again, we're very bearish at that point, obviously. So we have to let the bears try twice. We can't just pick a bottom like that. You could try, but it's very difficult to pick bottoms in a real strong bear market. Bears try once, bears try twice. At this point, remember, we are at a major turning point. Remember, we talked about this earlier this week, the 3 key components to a reversal. What is it? A major turning point, signs of exhaustion, and what? A stop run. Something as the catalyst. Something for a catalyst, right? Where are those stops right above that high? This is everything you need for reversal, right? Get a major turning point, range above us magnet, signs of exhaustion, 1, 2, and then the catalyst are those stops getting hit. So same thing, right? 2 try failure, run back up, find that new channel. And again, I'm simplifying this pretty good for this video right now. We'll drill down to our faster time frame. This is a 10,000 tick chart today on the Emini S&P, right? So of course, we're going to grab that failure or grab that channel reversal and then run back up. And again, where does it want to go from there? It'll want to go back up into the other side of that trading range as it rotates back and forth here. Here's one more too. And again, remember too, everything I'm talking about right now also applies to the NASDAQ. So here's another one. We take out that low, right? We pull back into support. We pull back to the moving average. The bears come in and they blast, right? They jump off that moving average. This is a really easy one. These are called 1, 2, 3 reversals. Okay, 1, 2, 3. The key is that jump off the EMA. We mark off that low. We mark off that high. We grab those. Again, I love traps, right? Traps are my favorite because they give you kind of all the pros. Look at those traps there. Traps, failure pattern off the moving average, pullback pattern off the moving average. And again, we know where the market wants to go at that point. It wants to take out those lows. But be aware, though, as you start kind of getting underneath, and this whole area really, this whole area right here really should be kind of like a whole green area. right? Again, because of those multiple ranges that we have here. So I like that trade a lot. That seems to be a very realistic trade here for tomorrow. And remember too, a lot of this may, we may get that pull back. They may double top off it, and then we get that 1-2. You know what I mean? So there's a lot of different possible variations of this, but that's kind of the key component to it as we go. And then don't forget that grinder. Right? That pop down. Now, instead of the pullback and the blast, right, it pulls back a little bit and it starts to kind of grind down. These can be tricky because they're oftentimes very slow. They don't seem very convincing, but the giveaway is that grind. You mark off that low. You mark off that high, you look left and find those prior swings, and again, you hit them right where it hurts, right? Above those prior swings, above that moving average. Obviously, I've said this a couple times already here, those traps, those failures, and those pullback combos. So again, looking at targets here below the lows here, and then leaving that runner down at that low here for tomorrow. I think that pretty much covers it here, right? We know how to trade as it goes higher, right? Be very careful buying up here. That is where the best possible traps are going to be here. Be very careful. Keep in mind too, tomorrow's a Friday. If we start going sideways in here, right? Sit on hands. Nothing new to see here. Okay, if it goes sideways, let it go sideways. Think of it this way. The longer it goes sideways, the better off that short will be off the high. All right? The better off that short will be off the high. So stay out of the middle of those ranges. Wait to get that. Again, that breakout, does it hold? Breakout, does it trap, right? So you guys on the game plan here for tomorrow. Looking good on the S&P and the NASDAQ. Very excited for tomorrow's trading session. And then wrapping things up here tonight over on the crude oil. What's going on with that oil? Boy, nice big bullish rally here on the black gold, the Texas T. There are two key insights on the oil here tonight. Oh, and by the way, don't forget, this is the 0822 contract. This is a 2,000 tick chart. There's a very good chance tomorrow we're going to come to our desk tomorrow morning and we'll make the move to the 922 contract. How do you know when to make the rollover? You make the rollover once the total volume, right? Put a volume counter. We have a market analyzer here on NinjaTrader. But when the total volume traded tomorrow morning is greater on the 922 contract, just make the switch. It's that simple. And if we have them kind of similar, oftentimes on oil is one of those kind of weird markets on rollover where sometimes the volume is pretty much identical. So if you see the volume is pretty much identical, I usually stick with the current contract. Once the volume really rolls to the 922, we'll make the move over to the 922. Okay, you really can't mess it up. All right, your broker's not going to deliver a bunch of oil to your doorstep. This is not expiration tomorrow. Okay, so you really can't mess it up. Right, go where the volume is. If there's more volume in the 922 contract, go there. Right, so keep that in mind. We'll know more here in a couple hours. Sorry. Back to our program. Two key insights. One is that strong move higher. Remember, anytime we see a strong move higher, what do we always say? We have to respect that momentum. We got to respect the fact that there's a lot of momentum right now, and the buyers are going to want to retest that high, right? They are. They're going to want to retest the high. Now, from there, do we fade off that high, which looks like a pretty darn good trade, right? Do we break through that high and possibly go to that 100 big round number, the granddaddy, right? The big kahuna of all the big round numbers up there at 100, right? Or do we pull back and they fail? Right? Why would they fail? Why would they fail? Maybe it's the range down below us, right? This is the second big clue. And you could argue this is the biggest clue in the chart. You could definitely argue this is the biggest one. We had a bear move down in trading range today. The market, of course, runs lower and just miraculously it comes all the way back up, and we're pretty much equal to that pendulum swing, as we say. Right? That pendulum swing, very, very common in a range-bound market. Now remember, pendulum swings, right? The amount we go below the range, the amount we go above the range. Pendulum swings, they really shouldn't be taken so detailed, right? So it's around this area. So as far as I'm concerned, we are close enough. The high of day from today is right there. So I wouldn't be surprised if it pops up a little bit higher, finish the pendulum, that pendulum off. But be aware, though, right? We do not need perfect when it comes to pendulum swings. So what does all this tell us right now? Well, really, a lot like the S&P and the NASDAQ, it smells like traps up here, right? It really does. If you kind of zoom things out a little bit, you can see we've got some very strong bear trend right now running lower. I mean, come on. Is there a better place for sellers than right above that high right there? Is there any better place for a long-term seller or a short-term seller to sell off that high? Hell no, right? You could say this is one of those bigger examples of strong move, shallow pullback, lower low in price. What we're seeing right now in this S&P in the big picture is nothing more than that traps, baby, two-try trap that we talk all the time. It's just on a bigger scale, and we know markets are fractal. And so, again, this area up here, be very careful. Bears would love to sell off that high, absolutely. I think bears would also love to sell a reversal, going back down. And not only going back to that range, but potentially taking all the way back out to that 91. Now, there's a bit of a variable for tomorrow, the rollover. Rollover always kind of seems to cause a little bit of congestion, if you will, right? So there's always that, that it may not be as clean as that for tomorrow, but that's kind of the game plan that I have right now. So really kind of feeding off the lessons we've already talked about already here. As we go higher, let me kind of clean this up here so it's not too distracting there for us. But, as we go higher here, again, we're very bullish right now. Okay, very bullish. So I have to respect those buyers. And as we take out some of those highs here, buyers come in once, buyers come in twice. Again, this is not where you expect the big money buyers, right? This is not where you expect veteran traders to be buying into these highs like that. These are, we have to assume rookies, right? These are inexperienced traders, small trade accounts, not very well capitalized, right? They don't quite have a grasp on market context yet or momentum. And once those buyers once they kind of dig that grave there, now we know exactly where their pain is. Right? And now they can target selling into that pain. Now, a couple things we haven't talked about yet. I try to save the best for last here. Is remember, some of the best entries on these two-try failures are those traps above that high, right? That gives you a much earlier entry selling high than selling down here. So watch that trap, right? Watch that trap as we go. Or another variation would be if, for example, we go up like this, and we get something like this where it kind of collapses right away, right? And then runs down like that. We don't want to sell down here, right? We don't want to sell down here. Why? Because all of that is risk now, right? It's basically all risk. The risk reward now is killed. So if we go up, and again, these are some variations of the same exact pattern setup that I've been talking about so far repeatedly here on the Thursday night, right? The ideal one, right, is that kind of 1, that 2, really get a good risk reward ratio on it. My risk is here, my reward is back here. That's kind of the textbook example of it. If I can get that trap above that high, even better. Right? Even better. So really kind of the best scenario would be the trap high. As it rolls over, we find that new channel off that low, and we grab that first test off the high with the goal, of course, now going back down into that trading range. And potentially, boy, this could get pretty ugly for the bulls, right? This could really take off the downside and bury those lows here. Easy come, easy go there, right, for the buyers here. That's kind of the textbook example of it. Or we go up, we get that real sharp kind of slice, right? At this point now, I'm way too low off those highs here. And so as it goes, that's exactly where a trap comes in, right? That's exactly where a trap comes in, okay? Because now, remember, now here's your risk now, and your reward is down here, right? Whereas if I sell down here and with the short down here, now look at my risk. My risk is way up here. My reward is not nearly as good. Right? So better entry if it pops up and begins to kind of slice down like that. Think about those traps here, right, for that short. Or let's say it does kind of pop up, and a variation of that would be where we kind of get below and then blast running lower. This is that 1, 2, 3 reversal. And again, all of this can apply to the NASDAQ and the S&P as well, because all kind of the same stuff, right, at these highs here. So if it gets back underneath that moving average and those bears come in and just blast it, that's your cue right there, right? Mark off that low. And what I usually do in these ones is, if it's really steep like that, I'll mark off that low. I'll go up to that big high, find that big high, and then usually there'll be a couple spots here, as we go lower, right? Off that low, off that big high. I'm always trying to find kind of those bigger tops up there to allow me to get a good trap off those levels. Get me above the moving average for that trap, that failure, and that pullback from there. Again, all this stuff can be applied to the S&P and the Nasdaq as well. So now you guys know some kind of variations of that, just in case we don't get that textbook short, you know what I mean, off of that high. Because you really have unless you're willing to scale into it and sell into it as it goes higher here, it's always going to be difficult to pick the very top, like it is very difficult to pick the very bottom. To pick a bottom, you simply wait for the 1, the 2, you buy into those stops right there, and you grab that new channel off that high, off that low, and you buy the first pullback, right? This is exactly the pattern setup I was just talking about, right? Just the opposite direction on the short side. All right, so keep that in your radar here as we go higher and kind of trading over that turn as we go. Now, as we pull back lower, okay, as we pull back lower, this is the same thing we talked before, is that we're definitely bullish, right? There's no question about that, but a very difficult spot to want to sell up here. To want to be a buyer up here. Range below us. So the only real safe way to be a buyer on this is to anticipate those bears getting short, let them try twice, and then knowing that we have that nice strong pop going higher and they want to retest that high, use those stops as fuel. And then once we get that stop run, take some profit off there, leave a runner. At that point, do we pop up 1, 2, back down again, right? Do we double top off that high? 1, 2, back down again. You can start to see how this sequence starts playing out over and over again, right? Once you learn this dance, everything becomes a whole lot easier. And it's just a matter of kind of waiting for everything to play out and not kind of shooting yourself in the foot by trying to force trades in the meantime, right? That's kind of one of the hardest parts. But once you kind of know what to expect, it's easier to wait for it once you know what you're looking for. And then obviously, again, don't forget, if this thing just torches and runs lower here, right? If it just torches here and runs lower, strong move down, shallow pullback, right, off that moving average, lower low in price. Remember, the lower low in price is the key here, because that tells you it's not going to be just a 1, 2 back up again, right? Makes sense? So lower low in price, shallow pullback, traps, baby. That's a great trade too, right? Great trade too. Mark up the amount we go above, mark up the amount we go below. That'll help you kind of refine where that exit is. Again, I would be quick on the exits down here, right? I wouldn't try to, obviously we know where the market wants to go, but there's a good chance these markets kind of consolidate here into, some sort of bigger, some sort of wider trading range here. So as we kind of get down around these lows here, right, I would start looking for, taking that profit pretty aggressively down there. And then again, looking for that possible failure back up into that trading range once again. Maybe a pop and grind, right? We pop down, we grind down. These are always very easy. Mark that low, mark that big high, find those traps and hit those, right? Hit that short off that high. In this particular type of pattern, it's always the first leg and the third leg, right? See how that kind of works, right? It's that first leg, the kind of pop. The grind leg is the second leg. It's always kind of the messy second leg. And the third leg is the one that will kind of give you an idea of exactly where the best exits are going to be on that downside. So keep your eyes on that as well. All right? I think we've covered most of that. Oh, and again, on oil, just like on the Nasdaq, right? If we do, let me get rid of this channel here, same basic idea, right? If we take out these highs and we pull back to that moving average and they blast, right, through these highs here, as much as I would love to short the heck out of these highs here, we have to go where the money's going. We can't just, be married to one direction. So if it does hold that pullback and blast, remember, anytime we see a strong move like this, we know they're going to want to retest that high. So mark off that high, mark off that low, find those, again, traps, failures, pullbacks. And where do you think the market wants to go? Definitely 100, but it's that little guy above, 189. Really, this whole area up here is another really kind of a juicy area here for more shorts. So we really got to get, just like the S&P and the Nasdaq, we really got to get that pullback and that pop. And then from there, we can start finding those new channels. We can drill down and get those entries off of that low. Or let's say it pulls back and pop and grinds, right? That's your giveaway. There's your pop and grind channel. Same thing over and over again. Rinse and repeat. Once you learn these, again, once you learn this dance, it becomes a whole lot easier. And speaking of a whole lot easier, you know what else makes things a whole lot easier? Coming out and trading with me every morning at the opening bell. We get the game plan put together tonight, right? That's the easy part. It's the fun part. Tomorrow, every morning, 8 o'clock Eastern time, we're going to go out, we'll trade this stuff together. Get started first, the free class, the free trading course. We'll kind of get you back on the right track. I'll put all the membership links, all the free class links in the description of the YouTube video. Start with that free trading course, learn the strategy basics, right? Get going on tick charts and using the moving average correctly, and then you'll be ready to upgrade to our advanced membership and come out and join us every morning in our trade room. Don't be afraid to call the office. I'm here if you guys have any questions along the way, so don't be afraid to call the office. We've got live chat. You can also, of course, drop some questions in the comment section below. And at this point, we'll wrap things up here for tonight, wrap things up here for the week. Don't forget, I'm going to miss you guys next week. Believe me, if you know one thing about me, I am very routine-based, and I do not take time off from these newsletters very, very easily. But I know I've got some really great stuff I want to create for our students here at School of Trade, so it'll be worth it. But I will not be here next week here on the video uploads. Again, if you're a student of mine, I get you back, right? Don't you worry about us next week here. But again, no videos next week. We'll come back that final week of the month of July on the 25th of July. All right, guys, I will be here, so shoot me an email, drop me a question in the comment section. I'll be here to help out next week. You guys have any questions? But until next time, we'll see you guys on the 25th, right? If not, we'll see you guys in the trade room here tomorrow morning. My name is Joseph. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.